Leasehold improvements are made to the premises a tenant is leasing to make sure the space is functional for them. It probably won't surprise you that tenants can only make these improvements with the landlord's approval. But it may surprise you that even when the tenant pays for the improvements, almost all net commercial leases make these renovations the landlord's property as soon as they are completed. The tenant is responsible for the upkeep of the improvements. The tenant is responsible for purchasing insurance, covering the cost to rebuild the improvements if the building is damaged. Based on lease terms, the tenant may also be required to remove the improvements and restore the rented premises to their original condition at the end of their lease. Now that we understand who usually pays for them, let's consider how leasehold improvements are paid for. Because without specialized net lease software, this is where things can get messy. And if you aren't meticulous in your record keeping, a tenant can end up paying for the improvements not once, but twice, which is a compliance risk. There are three main methods of handling payments for leasehold improvements. All three methods are good practices, and no method is better or worse than the other. Method 1. The tenant pays for the improvements directly to the contractor. When the tenant pays directly for the improvements, those improvements are categorized as CCA Class 13 on a Canadian corporate tax return. They fall under the half-year rule and are amortized using the straight-line method. Therefore, the costs are expensed equally in each period over the first term of the lease. Method 2. In Method 2, the landlord provides a financial incentive to get the tenant to make a better offer to lease, which may involve the tenant doing more tenant work or staying longer. This incentive amount is either a fixed amount or an amount of X dollars per square foot paid to the tenant to offset the cost of the improvements. It is often built into base rent, and from this perspective is invisible to tenants. It's like a cashback offer, as the cashback value is included in the price. This method is considered income to the tenant. The tenant may use the inducement amount to offset the capitalized costs directly to defer the tax impact. At the same time, the landlord can treat the inducement amount as a current deduction, but only if it's clearly for the purpose of acquiring that particular tenant. The landlord will likely amortize the cost of the inducement amount over the first term of the lease. Lastly, there is Method 3. The third method is for the landlord to make the improvements and pay for them. This can be tricky from a tenant's perspective because the cost of the improvements may be bundled up into the base rent number. So then, leasehold improvements are accounted for differently depending on who pays for them. If the landlord makes the improvements and pays for them, and if the costs are of a nature that isn't specific to a particular tenant, the cost can be capitalized to the building. When this happens, for tax purposes in Canada, those costs are categorized as CCA Class 1, and a declining balance depreciation rate of 4% is used. The base rent is then treated as rental income only. Leasehold improvements are accounted for differently depending on who pays for them. They give rise to many questions, and their mathematics can be confusing and feel overwhelming if you aren't a tax expert. Some landlords try to simplify their mathematics by bundling the rent and inducement repayments together and presenting only two payment numbers, one for rent and one for the extra rent to pay for the improvements. Or they will go a step further and present only one number for gross rent. But trying to simplify the numbers means that the landlord ends up paying income tax on money that isn't really revenue. Another consideration is that if the cost of the tenant improvements is not properly accounted for and ends up in the base rent number, it could artificially inflate the property taxes, which are based on the rental income, which makes it harder for the landlord to compete in the open leasing market. Finally, as you approach the end of your first lease, a new rate must be set. If the new rate is based on the market value of the improved space, the tenant will be paying to use the improvements it's already paid for. This means they are paying twice for the same thing. The problem of unclear improvement cost allocation and recovery can also show up in lease extensions and early lease termination. Accounting for leasehold improvements can be highly complex and time-consuming. When things aren't laid out clearly initially, both the landlord sets themselves up for conflict and tenant-requested audit in the future. But it doesn't need to be this way. Commercial lease landlords should use systems that facilitate accurate record-keeping. With our specialized net lease software, you can painlessly perform complex calculations for even the most complicated leases and unique commercial net lease allocations. The integrated system of properties, assets, and leases flows logically, including a full audit trail. Extreme automation does the work for you quickly and accurately. No math skills required. CRESSblue means less stress, fewer staff hours, greater efficiency, and higher profits. Finally, a property management software system that makes sense. CRESSblue has you covered. Book a free demo today.